Hi everyone, Michael here. In this video, I'm going to be going over how the Federal Reserve keeps on saying inflation is just going to be temporary, don't panic, be patient while your grocery bills and everything skyrockets. Meanwhile, he's getting paid over $1 million a year, so he hasn't got anything to worry about, or all the other central bankers. But I'm going to be going over and showing you the proof, the facts, and the data, and the huge amounts of new reports coming out to say that these supply chain disruptions won't be temporary. They're going to be much longer than you think. There's going to be more events that are going to come up. They're going to lead to more supply shortages. And I'm going to be going over how inflation won't be transitory. A lot of these companies, manufacturers, and producers are saying there's going to be huge price increases coming, and they're going to last, and they're going to be here to stay. Okay, let's not waste any time. Let's get right into it. All right, everyone. So look here. The world economy is suddenly running low on everything. Not just a few items here or there, not just a little bit, pretty much everything you can think of, the world is running low on. Listen to this. Mattress producers to car manufacturers to aluminium foil makers are buying more material than they need to survive. The breakneck speed at which demand for goods is recovering and assuage the primal fear of running out. The frenzy is pushing supply chains to the brink of seizing up. Shortages, transportation bottlenecks, and price spikes are nearing the highest levels in recent memory, raising concerns that supercharged global economy will stoke, you know what we've all been talking about, the elephant in the room, inflation. Inflation is coming, and we're going to dig a bit deeper into why exactly it's going to be coming. And we're going to get news from the ground, the people on the ground, not the Fed. He's not on the ground. He doesn't know exactly what's happening with the supply chain disruptions, with the manufacturers, with the distributors, with the warehousing. We're going to get words from the cat's mouth on what's going to come. Copper, iron, and steel, corn, coffee, wheat, soybeans, lumber, semiconductors, plastic, and cardboard for packaging. The world is seemingly low on all of it. You name it, and we have a shortage on it. According to Tom Linebarger, Chairman and Chief Executive of engine and generator manufacturer Cummins Inc. Clients are trying to get everything they can because they see high demand. They think it's going to extend into next year. So the Federal Reserve keeps saying, oh, don't worry, don't panic, inflation's just going to be temporary, where he's saying this is going to extend into next year. And they say the word transitory, but how long is transitory? Is it 3 months, 6 months, a year, 5 years? They're not being very clear. And listen to this, everyone. The difference between the big crunch of 2021 and past supply disruptions is the sheer magnitude of it. And the fact that there is, as far as anyone can tell, no clear end in sight. People, this is very worrying. They're saying there's no end in sight. Meanwhile, the Fed is saying transitory. So who's right here? They also said big or small, few businesses are spared. And further exacerbating the situation is an unusually long and growing list of calamities. The key word there is unusual. Why are all these things happening? For example, the Suez Canal incident, the Colonial Pipelines incident, and this, the Mississippi River reopens near Memphis after shutdown caused a huge traffic jam. So this is something I haven't covered, but this actually happened, and it says here the Mississippi River reopened to vessel traffic near Memphis on Friday. The US Coastal Guard said, ending a shutdown of part of the waterway that disrupted shipments of oil, corn, and caused a backlog of more than 1,000 barges. Almost all grain barges must pass beneath the De Soto Bridge on their way to the Gulf of Mexico export facilities near New Orleans after being loaded along the upper Mississippi, Ohio, Illinois, or Missouri rivers. So it just seems like there's event after event after event that keeps disrupting the supply chain. Why is that? It seems a bit suspicious to me. Maybe it's just a coincidence, but it's a bit cray-cray. And people, listen to this. For anyone who thinks it's all going to end in a few months, consider the somewhat obscure US economic indicator known as the Logistics Managers Index. The gauge is built on a monthly survey of corporate supply chiefs that asks where they see inventory, transportation, and warehouse expenses. The three key components of managing supply chains now and in 12 months. The current index is at its second highest level in records dating back to 2016, and the future gauge shows little respite a year from now. The index has proven unnervingly accurate in the past, matching up with actual cost about 90% of the time. And as you can see, this chart here is a logistical nightmare. Transport, storage, and inventory costs at near record highs in the US. So we can see the black line is transportation, the pink line is warehousing, and the blue line is inventories, and they're all close to record highs. And you want more proof of inflation? Listen to this. Essentially what people are telling us to expect is it's going to be hard to get supply up to a place where it matches demand, Rogers said. And because of that, we're going to continue to see some price increases over the next 12 months. Okay, so we're starting to get more and more evidence that inflation won't be transitory. These people are saying there's going to be price increases for the next 12 months, maybe even longer. And it pretty much just says here that core inflation was its highest levels, excluding food and fuel, since 1982. So that's right, we're having inflation of the 80s right now, but the Fed is saying don't panic. And it says here, unless companies pass that cost along to consumers and boost productivity, it'll eat into their profit margins. So they have to pass the costs on. And it also says here, which just clarifies our concerns, a growing chorus of observers are warning that inflation is bound to quicken. So people have been saying, look, it's just a base effect. Now the worst of inflation is behind us. I think the stock market hasn't priced in that there could be more inflation, and they're thinking it's all behind us because of the base effect from April last year when there was deflation of 0.7%. But these people are saying we haven't seen the worst of inflation. In fact, they're saying inflation has really just begun. The threat has been enough to send tremors through the world capitals, central banks, factories, and supermarkets. The US Federal Reserve is facing new questions about when it will hike rates to stave off inflation. So this is very interesting. Jerome Powell is coming under more and more pressure to start talking about lifting interest rates and to start tapering its quantitative easing. Everyone's calling it out now, and I can't wait to hear Jerome Powell's new excuse at his next appearance to say why he won't lift interest rates or start tapering, or will he finally give in to the demand from the markets and the general population to start tapering. And the perceived political risk already threatens President Joe Biden's spending plan because there's already so much demand on commodities, there's already so much pressure on inflation. If this $2 trillion infrastructure plan does get through, hey, you may need the infrastructure, but it is also going to have an effect on inflation and make inflation even higher. And listen to this, everyone. You bring all these factors in, and it's an environment that's ripe for significant inflation. Not just a little baby step of inflation, not just a little nibble, a significant increase in inflation with limited levers for monetary authorities to pull. And that's something that's interesting. A lot of this inflation is coming from supply chain disruptions. So even if the Federal Reserve does lift interest rates, will they be able to bring inflation back under control? I think they'll have big issues because this is also a supply chain issue. So with lifting interest rates, it may not be enough to stop it in the short term. Over the long term, we'll have a weakening effect on demand, but in the short term, we'll continue to see price increases. And you know what? This really grinds my gears. Listen to this. Policymakers, however, have laid out a number of reasons why they don't expect inflationary pressures to get out of hand. They're already out of hand. Fed Governor Lael Brainard said recently that officials should be patient through the transitory surge. Not just transitory inflation, transitory surge. These people in the Federal Reserve and the central bankers, they're telling us to be patient. Well, our grocery bills are skyrocketing. Our consumer costs are increasing. The cost of living is becoming unbearable. And even if inflation calms down, these prices ain't gonna drop. And people's cost of living will be much higher no matter what happens to inflation. So no, people can't be patient. People can't afford to be patient. And Whirlpool Corp CEO Mark Bitzer told Bloomberg Television, this month its supply chain is pretty much upside down and the appliance maker is phasing in price increases. So again, more companies are raising their prices and they're saying they're going to continue to do this. And listen to this is more proof in the pudding. It is anything but efficient or normal, but that is how you have to run it right now. I know there's talks of a temporary blip, but we see this elevated for a sustained period. So again, another business saying it's not transitory. They're going to have to keep raising prices for a sustained period. The strains stretch all the way back to global output of raw materials and may persist because the capacity to produce more of what's scarce with either additional capital or labor is slow and expensive to ramp up. The price of lumber, copper, iron ore and steel have all surged in recent months as supplies constrict in the face of stronger demand from the US and China and the world's two largest economies. So again, I've been saying you want to hedge against this inflation, look at commodities, but now commodities have already skyrocketed, so I think we may have a temporary pullback, but I do think commodities are still undervalued compared to their all-time highs, so it may be a good idea to watch these supply chains. If there's going to be more supply chain disruptions, commodities are going to continue to rise. That is, of course, unless the US dollar strengthens or the Federal Reserve does start lifting interest rates. And it says here food prices are climbing too. The world's most consumed edible oil processed from the fruit of oil palm trees has jumped more than 135% in the past year to a record. That is crazy, 135% in 1 year. Soybeans topped $16 a bushel for the first time since 2012. Corn futures hit an 8-year high, while wheat futures rose to the highest levels since 2013. And this is what's really dangerous. If food prices continue to skyrocket, there's going to be people that won't be able to afford to have 3 decent meals a day. And this is something that's also very interesting. A big reason for the rally is the US economy that's recovering faster than most. The evidence of that is floating off the coast of California, where dozens of container ships are waiting to offload at ports from Oakland to Los Angeles. And look at this, everyone. This photo shows 21 cargo ships stuck off the coast of Los Angeles, contributing to the supply chain crisis. And it says here on April 16th, 21 ships were anchored off the coast of California waiting to be berthed. And this congestion is just one part of the global supply chain crisis that's been impacting companies and consumers. And you can just see more photos here of ship after ship that's stuck waiting to get into the port. And I don't know what's the hold up. I don't know why they're stopping them from becoming imported. I do understand there may be some congestion, but this is just crazy here. We haven't seen congestion at the ports like this ever. And also we're having a crazy chip shortage. Instead of proving to be a short-lived disruption, the semiconductor crunch is threatening the broader electronics sector and may start to squeeze Asia's high-performing export economies. It's not simply the result of a few temporary glitches, they are more structural in nature and they affect a whole range of industries, not just automobile production. Also, rail and trucking rates are elevated too. The Cass Freight Index measure of expenditures reached a record in April, its 4th in 5 months. Spot prices for truckload services are on track to rise 70% in the second quarter from a year earlier. People, we're seeing crazy inflation, double digits. We're seeing some prices rise 100%. Look at lumber, it's up 300%. Now, no, you can't just look at one commodity, and this is because of supply shortages, but we are getting close to what would be known as hyperinflation here. And at Colgate Mattress, Walken used to be able to order foam on Mondays and have it delivered on Thursdays. Now his suppliers can't promise anything. What's clear is he can't sustain the higher input costs forever and still maintain quality. This is kind of a long-term issue, Walken said. Inflation is coming. At some point, you've got to pass this along. And look at this, everyone. The home building industry is also experiencing supply shortages. And there's other supply shortages of computer chips, chlorine, steel, and ketchup. We all got to freak out when the ketchup runs out. So everyone, I hope this opened your eyes and showed you the evidence and the data and the facts that inflation is going to get much worse. There has to be more of an outrage. Where is the outrage like in 2008 when there's Occupy Wall Street? Where's the outrage with the Fed? The Fed is printing money like crazy. He's making the cost of living unbearable. He's going to destroy the middle class. But the Fed is lying to you and saying this is just transitory and just temporary. People, it's not going to be transitory. So we have to keep putting the Federal Reserve under the pump to do their job of one, price stability. We've already got a lot of the jobs back and inflation is already double their mandate. The CPI came in at 4.2% year over year. So now it's time to start tapering the balance sheet and start lifting interest rates. And if they do this, we're going to see a bigger sell-off in the stock market. And if interest rates go up 1 or 2%, we're going to see some weakening in demand. And hopefully the housing crisis will finally end in the US as well and prices will correct a bit. So for all my loyal viewers and subscribers, I hope this video was informative for you. If you haven't already, please tap that like and subscribe button. I'll keep you all update on the latest that's happening in the stock market with inflation, the housing market, and global finance news. If you're bored, I'll put up some other videos here. I'll see you there.